Castor Maritime, ticker symbol CTRM. We're going to look into the financials of the company, the dilutions that they keep doing, the insiders, and some interesting facts on the company. Let's get started. So it looks like one of the most popular stocks as of this morning. It was up 23.7% yesterday, and pre-market it's still having some run left. Now let's look into the financials. They came out with this Q2 report yesterday where they announced a staggering 6.5 million net profit for the Q2 of 2021. And same year, they had this 21.8 million for the 3 months revenue compared to the 2.6 million they had last year. That's a huge jump. Earnings, they were profitable. They made about 0.07 earnings per share compared to the loss of 0.12 for the shares per share of last year. So they have been improving quite a bit. Now let's look into this. I've been showing this on the channel quite a bit, but this is basically Chris Meyer's book 100 Baggers. They had referred to this particular article from an analysis of 100 Baggers by Tony. In this article, he gives a very good description of some patterns. He went through some of the 100 Baggers and tried to find out some patterns that were common in all these 100 baggers. There was one particular thing he mentioned about PE expansion. So basically, if the company goes through a continued growth quarter by quarter, there will be an automatic PE expansion based on the market value. So he gave basically two examples. These are basically two hypothetical stocks that he took up, Flat and ACC. In 2000, they had an earnings per share of $4 only. So for example, $1 each quarter, which gave you $4 at the end of 2000. Now let's say in 2001, Flat had an earnings of 1.25 in the first quarter, 1.25 in the second quarter, same way 1.25 in the third quarter, and same 1.25 in the fourth quarter. So in total, if you add all the 1.25s, you'll get $5 per share. That was for Flat. Whereas ACC in the year of 2001, they had 1.110 for the quarter one, then 1.20 for quarter two, 1.30 for quarter three, 1.40 for quarter four. So the difference is they have an increased quarter every quarter. They have been increasing their earnings per share. That is the difference between Flat and ACC, and that causes the PE expansion. And if you look into the Castor Maritime, come down here. And if you look into the quarter, you can look at the revenues. Well, they became profitable just this quarter. But if you look into the earnings, they have a continuous growth in revenues going on quarter by quarter. If you look into the annual chart, they have been having this quarter by or year by year revenues and profits increasing. At the same time, the year of 2020, they did not do well because of the pandemic, but at least this quarter, they now broke back and became profitable. So that's something which is underlying or following this pattern which they're talking about. Chris Meyer also mentioned about having an owner-operated business, and Castor Maritime is an owner-operated business. The owner, P. Petros, is still running the company. Because when your owner is operating the company, he has a different mindset. But there are a few curves that we need to know before we go into that direction. So let's understand the dilutions. Now, this is in the same Q2 paragraph that we saw, same Q2 report that came out yesterday. Here they have this ATM, or at the market common stock offering program. So they basically hired this group, Maxim Group LLC, where throughout the year they will be selling shares of up to $300 million worth. $300 million. That's crazy. So they already have this dilution in place, but they are planning on selling this. And in the month of June, July, they already issued $9.7 million. So many shares have already been sold. So that's a continuous dilution that's going on from them. And this is just the one that we came to know from yesterday. There have been dilutions going on all across the year. If you look into this one, this is Castor Maritime announcing completion of a $40.75 million debt financing. And they're not just doing dilutions on the share market, but they're also raising capital by debt financing. If you look into this chart, this is the 1 year chart, and this is when February, back in this year, February, many people lost their money. This stock ran up quite a bit because there were quite a bit of good news going on. It was very popular in the Reddit community. They've been buying ships and containers like crazy for the year of 2020. They took that opportunity, they bought so many vessels. But right in January, February, March, they started diluting so much, and that lost interest in all the company. You can see the stock has been falling ever since. So imagine someone who has bought in this particular range, they lost quite a bit. You're looking at least 70-80% down since that high. And there are many people, if you look on YouTube, there are many people, even on Reddit community, people bash this, basically talking about how they've been diluting and the stock value has been falling down. But let's try to understand why it's happening. If you think about it, I mean, why would the owner dilute so much when his own share value is decreasing, when he knows the dilution is affecting the share market, the price of his company in the market? So that's where you come into the insiders and you try to understand who all are holding this company. So if you look into this, only 1.25% is held by the owners. The institutions are not so much interested. It's only 2.58%, 2.62%. You would normally see a list of institutions, especially in companies like these, and you don't see many out here. And this is 1.25 only by the insider. So this is the owner, Petros, and he's currently the owner. He's running the company. He's everything within the company right now, and he seems to be owning only 1.25%. But there is something interesting. Look into this. This is the Castor Maritime institutional ownership, and under here you can look into, these are a couple of institutional holders that are currently holding the company. So they have about 14 million shares, 14 million, 13 million, 6 million, 2 million. And the lowest one, look into this. This is only 1 million shares. And this is held by this company called Thalassa Investments. Let's open this one. And if you open Thalassa Investments, you get these 13G filings. Let's look into the original 13G filing. And this 13G filing is done by Thalassa Investments, right? And looking at the owner of the Thalassa Investments, you will see Petros himself. So Thalassa Investments is nothing but Petros' company, which is investing CTRM from an outside party. So they have 1 million shares, and that's all they have within the company. And that's the only exposure they have for the stock. And that's why you can see the dilutions doesn't affect him, because he doesn't have much stake within the business. Charlie Munger mentioned, show me the incentive and I will show you the outcome. Basically, if you have the owners and the insiders invested in the company, then their interest and their mindset or interest aligns with the interest of the shareholders. But it doesn't look like the case here in this particular investment. So that's with the insiders. Now let's look into some of the interesting facts on the company. So we saw Petros, right? He's the founder and he founded the company back in 2017. He's currently everything. He's the board of directors, he's the CEO, he is the CFO, everything within the company. In fact, I'll show you later on, he's currently the only employee in the company. If you look at those employees, it has only one employee, and that is Petros himself, most likely. But let's try to understand. This is Gabriel, and he is the father of Petros. He ran this company, very profitable, very, very big company. This was Excel Maritime Carriers. He was considered as a Greek shipping magnate, a very big name in the shipping industry back in Greece. And if you look into this particular section, he was among the 1,000 Forbes world's richest people back in 2008. Now, if you try to look up Excel Maritime Carriers, what happened to this company or where is this company, you'll see this particular New York Stock Exchange. The trading was suspended back in 2013. Excel Maritime, which was owned by Gabriel, the father of Petros, basically the suspension of their stock exchange on the New York Stock Exchange. Now, this is interesting. Back in 2013, Excel Maritime filed for Chapter 11 bankruptcy. And this was by basically Gabriel himself. It did not go so well. They were even, he was even taken to the court by other shareholders, how, and the bondholders. They did not like some of the terms and agreements that were happening within the company. But yeah, a Greek magnate who had to bankrupt the company. Then this happened back in 2013, right? Now looking at this, Pavimar. This is Gabriel's daughter, Isimini. She started this company back in 2014. So just after the bankruptcy, they restarted basically and started a new company. Because this bankruptcy, they did receive quite a bit of revenue back outside. About 60% of the cash was given back to Gabriel's family. They opened up another business back in 2014, Isimini, called Pavimar. And right now, Pavimar supplies the crew, the management, all the hard labor that requires. Basically, what Castor Maritime needs is all supplied by Pavimar. So Sister Isimini helps run what the operations are required by Castor Maritime. Look into this particular aspect. This is Castor Maritime's business, and this business, if you look into the address, it opens up into a residential apartment address. You can look it up yourself, but never mind that. That's not something which is too concerning. Employees only one. It means that the company is running. It might be Petros himself and everyone else. They don't have any liabilities as far as workers are concerned. But now this bankruptcy happened in 2013. So I was curious why this bankruptcy happened, especially on a giant like Gabriel, or a person who's such a big name in the shipping industry. For a company of his size going into bankruptcy, I wanted to know what happened and what were the scenarios behind that. So if you go back to 2013 and try to understand the articles and the news that were going on in that area, this is interesting. So there was a shipping slump that happened in 2013, 2012, and that continued. Basically, there was oversupply of not just the data, not even the shipping supplies were too much in the market, but the economy was down, and there was not so much of interest and need for shipping. And that's when a credit squeeze happened. So the banks, they started to cut their exposure to risky and dollar-denominated assets such as ship finance to meet tougher capital rules. So the banks started to cut their exposure. The credit squeeze started to growing credit squeeze will challenge even the toughest companies in the seaborne sector. That's what brought down not just Gabriel's company, many other companies in that shipping industry. Everyone came down. And that's where this dilution is interesting. Now it comes into full circle, because here, back then, companies were depending on the banks for credit and all their financing. But here, Petros is running a different game. He's basically going into the dilution sector. So he's raising capital from the market. Stock market is, the companies come into the stock market as a medium to raise capital for their businesses. And that's exactly what Petros is doing here. He's just coming to the market to dilute his shares, to raise capital so he can go and buy more containers, more vessels out there to carry out his businesses. And unlike back then where the banks were basically loaning or crediting the companies, in this case, he is diluting and he's raising capital himself. Yeah, found it interesting. I may be wrong in my research. I may have taken some information in a biased way, but found it very interesting. I'll share all these links in the description for you to look it up yourself, and let me know what you think about it and what are your thoughts on it. And if there's anything that you want me to look into, I find it fun. This is not financial advice, just researching and displaying what's out there, just giving my opinion. But no, this is not financial advice at all. With that, take care, stay safe, bye-bye.